Welcome back, everyone. In today's deep dive analysis, we're breaking down everything happening with Applied Digital Corp, APLD, so make sure you stay until the end because there's a lot to unpack here. Applied Digital surged 12.65% to $33.30 after Craig-Hallum raised its price target from $39 to $40 while maintaining a buy rating. And this comes after the stock has already delivered an incredible 239.6% return over the past year, reflecting extremely strong investor interest and momentum. According to key takeaways from the company's latest earnings call include advanced discussions for 3 new data center sites totaling 900 megawatts, with each campus potentially expandable to 1 gigawatt. And when combined with the existing Forge 1 and Forge 2 campuses, this positions the company for up to 5 gigawatts of total growth capacity over the coming years, supporting its impressive 68.35% revenue growth over the past 12 months. Management made it clear that demand is not the issue. The real constraint is execution, specifically scaling efficiently across multiple campuses while staying on schedule and within budget. And they are targeting $1 billion in net operating income over the next 5 years, with confidence they could exceed that goal. However, despite these ambitious expansion plans, the company remains unprofitable, with a diluted EPS of 44 cents over the last 12 months, and analysts expect continued losses this fiscal year, reinforcing that this is a high-growth but high-risk business model. On the trading side, $1,125 was made on APLX cash-secured puts, 2x APLD ETF, although $310 was missed due to low volume, as contracts that should have expired worthless required raising the order price to find sellers, and holding $25,000 in a highly volatile stock into 1017 was not ideal, especially after APLD surged post-earnings despite reporting a loss, with massive volume of 137 million shares traded. Heavy short interest sitting around 35%, and a 15-year data center lease that makes this a stock to closely monitor, with a key technical level at 14.49 and the stock currently elevated after a wild week for investors. Much of the recent selling pressure stemmed from Nvidia exiting its position in Applied Digital, and that fundamental catalyst significantly impacted investor confidence, triggering a notable sell-off, which we're now seeing reflected across multiple timeframes. On the hourly chart, price has trended below the $29.45 support level for several candles, and in the past, when price attempted to break under similar levels, it dropped toward $27.62 before reclaiming higher levels. So we are still within reclaimed territory. But that level is critical. On the weekly chart, what stands out is the prior beautiful uptrend followed by a smaller pullback within an ascending structure. Yet this week printed a very aggressive seller candle, largely driven by that fundamental Nvidia catalyst, which interrupted what had been a strong push back toward all-time highs. On the daily time frame, the stock previously formed a bullish flag after its breakout, followed by second and third legs to new highs before a sharp sell-off and bounce, reclaiming above $29 and re-entering the major $32-39 range, which is the primary zone needed for a breakout retest of all-time highs. But after testing 39 resistance, the stock faced a heavy pullback with 5 consecutive red days, a brief attempt by buyers to reclaim $32, and then continued amplified selling pressure. Technically speaking, the setup is not the strongest at the moment, though a bounce remains possible, as price appears to be reopening the broader $29-39 macro range. Currently, the bias leans neutral to slightly bearish short-term because Nvidia's exit was not just a temporary sell-off catalyst, but a deeper confidence factor, raising the question among investors of why hold APLD if Nvidia no longer sees value. And this uncertainty has created ongoing volatility without a clearly established bottom. From a technical standpoint, a move toward the 2750 to 2070 zone to form a potential double bottom seems likely, and if that level fails, the $21 floor becomes a realistic downside scenario. However, even a correction to $21 would still maintain the integrity of the broader macro uptrend and would not invalidate the long-term structure, though in the near term, buyers must reclaim $29.45 and ideally $32 to reestablish bullish momentum heading into the next trading week. When comparing relative strength against the broader market, particularly the S&P 500, we see that while the overall market has posted multiple green days and bounced constructively, APLD continues to sell off, signaling weak relative strength. And if broader market conditions deteriorate, that could add further downside pressure to a stock already struggling amid negative headlines and technical weakness. So right now, 3 key factors must be watched closely: relative strength versus the broader market, ongoing news catalysts that remain slightly bearish, and technical levels including 27.70 support and $29.45 to $32 resistance reclaim zones. Within a healthy macro range, but faces significant short-term pressure, placing it at a decision point where sellers could push it lower or buyers could step in aggressively and defend support. And that's the full breakdown of what's happening with Applied Digital this week. If you want to learn how to read charts like this and trade spot setups such as pennant breakouts with confidence and structure, check the link in the description to access the Trader's Framework, where you'll learn exactly how to analyze technical setups like a professional. And if you found value in this analysis, make sure you hit that like button, subscribe to the channel, and turn on notifications so you never miss an update. Trade smart, stay disciplined, and I'll see you in the next one.